what's interesting is that when economic growth softens, the urge to transform digitally seems to increase. We saw that with the pandemic in the first quarter and second quarter of 2020, when as growth slowed, the change agents inside companies were given more oxygen for change, and companies put much higher up their agenda the need to change, particularly digitally, but across all their operations. So we anticipate that in 23, and when you look at the forecasts for the digital transformation industry, marketing transformation industry, what we see is forecasts of around 15 to 20%, with digital as a proportion of ad spending rising from its current 55% to about 70% by 2024. So the background with that tailwind, putting aside the GDP tailwind, which is going to be influenced by interest rate policy, taxation policy, and the like, with a transformation tailwind will continue.
Martin, there's a
on
lot
inflation.
Of
On inflation, Steve, we've not seen any impact, and the wage inflation that we've seen. I mean, the demand for digital people has continued to grow over the years. We've seen no difference in that; it's still there. Where we've seen, and this is to be welcomed, is a leveling up in salaries, gender pay gap being narrowed, the pay levels for Hispanic, Asian American, Black people, particularly in the US economy, being rising. The media industries have not been particularly good on diversity and equity and inclusion. They're getting better, and we're seeing that pressure, and that's to be welcomed. That's a leveling up, which I think is a positive, not a negative.
Yeah, and here, we couldn't concur with that more, Martin. But in terms of wage inflation, you're saying it's no worse than it has been historically. I think that's what you're saying as well. But the wage inflation is there, and my understanding is in certain parts of your business, it's significant double-digit inflation.
No, I wouldn't put it at those levels. But the reaction amongst our clients to inflation is a little bit mixed, Steve. I mean, what they've had to do since the great financial crisis of 2008 is grow their top line in line with GDP of around 2 to 3%. They've sort of cut their costs by 2 to 3%, maybe bought back stock if they were listed, and their EPS has been growing by somewhere like 0 to 5 or 5 to 10%, and that was a good steady state. The pandemic sort of rocked them out of that situation, and what they had to do was to sort of rebase the companies, which they did during the course of the pandemic. And what we're seeing now is a little bit of inflation, which actually gives them, from a pricing point of view, a little bit more wiggle room. I mean, FMCG companies probably welcome a little bit, not too much, maybe the levels that we're seeing reported, for example, from China today and elsewhere are on the higher side than even they would want. But certainly a little bit of inflation gives them more room to maneuver from a pricing point of view. You can see that in the results from the FMCG companies like Unilever, like L'Oreal, like Nestle. Probably L'Oreal and Nestle doing much better, or P&G doing much better on the volume side.